All right, welcome back for the episode of Carnivore Trades. Today is Tuesday, May 23rd, 2023. If you're not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, let's get into it today. So, down day here on Wall Street. So, market's down 1.11 there on the SPY. Triple Q's down 1.27. The Dow down 65 basis points. And the Russell down the least here. Up down 44 basis points. So overall, lots of political theater going on here. It's a drama series. It's kind of ridiculous at this point. Republicans not meeting, then Democrats are blaming, who really cares here? But the point is markets are lower here. And the debt ceiling remains kind of like the main issue right now. And, markets, coming back in. So again, there's the Russell 2000. That to me, by the way, I keep hearing about rotation here, and that to me looks like a distribution, like liquidity grab here. By the way, I mean, rotation, I'm not so sure about that. You got to, and I've been talking about this for weeks now, down move. What kind of pattern is that, right? That's a bear flag. And you look on the monthly, down move, bear flag here. So I don't really see the case for rotation right now. In fact, we went up there, we tested the 100 and 200 and got rejected pretty hard here. But again, markets are overbought, right? Triple Qs. Again, we talked about the RSI last week. Every time that we've gotten above that 70 level and we've had a sharp decline, that's been a pretty significant top, really going back to 2021 right there. And then we get back below and we never really recover. Never quite got there back here. And then right here, we kind of double tapped it and then came down. We peaked above it in January, early February, and then we came down here, peaked again. And this one was a little bit more of a mild pullback. The S&P pulled back more, obviously, but again, market's overbought. Bottom line, though, really want to talk about today is the SPY. So spiders here. This to me looks like a failed breakout. Now it's not like it's a broken pattern here. You're above the moving averages. You have nice spacing between them, so it's holding up okay. So you coiled. Let me just get rid of the trend lines here. We coiled for 1, 2, 3, 4, 5, 6. You could argue 7 weeks. All for what? A 2-day rally? We should be pumping right now. When you build this much compression, it should be a spring, and it should really break out. Maybe you get a pit stop at 425, and then you have to flag up to 430. But that's not good. Closing back below the May 1st high and the February 2nd high. So really kind of a failed breakout if you ask me here. Now, we are above the 20 moving average. Until that breaks, they could come back in and save this. I'm in the camp that's not probably not going to happen. Reason for that is we're going to have the debt ceiling likely done this week, I would think, or at least it's going to be done the last minute, which is coming up allegedly June 1st. So that will be next, Wednesday night. So June 1st is Thursday, 31st Wednesday night. I think that's going to be a seldom news any way you look at it. And the reason for that is the Treasury is going to issue another $700 billion and it's going to come off of bank balance sheets. Since March, we've had liquidity injected. It's going to get removed again. So we're going to go back to QT. But for right now, a pretty weak showing. I mean, for the bulls, you really kind of want to keep this bullish structure. You should be pumping here and attacking that gap. And you did all this just for a 2-day pop and then a reversal. And again, like I said, the Russell here, this is not a good candle. A shooting star there after hitting the 200 moving average. Again, this is kind of a risk period here as we get into kind of that quarterly OPEX time. So again, there's a reason why they call it sell in May and go away. We haven't seen it that much yet, but there's still plenty of time here. And I think that this market probably, from what I have penciled in here, declines into June OPEX. So again, right now, not huge volume again on the day. Nothing like to say that there's a huge, a massive amounts of sellers here. But if you go back and look at last year, really, that was the case. Every single one of these tops here, this one, not really heavy volume until you get down to this leg. That's when it really starts to pick up. March, not very good volume on the decline until we got the second leg down. That was where the volume really picked up. Same thing in August. Really light summer doldrums volume. then the volume starts to really pick up on that second leg down. And even in February here, light volume, everybody kept calling this a bull flag. It's a bull flag, and then it failed. So again, I don't really think the volume's that important right now. They're getting very good at masking these tops. If we do get a high volume sell-off, that probably does mean that there's a top in place. But they've been getting pretty good at masking them. And I think we probably start to work our way down, definitely away from that JPM collar level and probably towards that 400 handle, which coincides with this upsloping trend line and this downsloping, broadening pattern. So that's a pretty good area of support there. There's also the 200 moving average. I think that at least gets tested, and that's been flat for a while. So we did break above it. We've never back tested it. So it's a good area of support down there if we were to get into that area. But for right now, near term, it just, for bulls, I would be frustrated as a bull if, people talk about bear frustration lately. Imagine you just been holding long for the last 2 months, and this is what you got to show for it so far. So again, nothing terribly broken. The 20 MA is still holding there. Again, on the ES, it's still holding there as well. So nothing, it's not like a panic just yet, but there's no follow through right now. So to me right now, it's a failed breakout until proven otherwise. And failed breakouts can cause a pretty substantial move in the opposite direction. So just be aware of that. Triple Qs here, we already touched on a little bit. But again, went up into that 340 area. I kind of like the levels on the NQ a little bit better. It's a little bit easier to see. You can see this kind of point of control here going back to 2021. We pierced the double top, and now we're into all this supply here. So again, overbought, extended, whatever you want to call it here. Again, NVIDIA earnings coming up soon, so that will be obviously a catalyst to either upside or downside. But right now, you're basically back testing this area. I do think if we go back to the Qs, I do think there's probably good daily chart support right in this area here. So notice how these trend lines are kind of converging. 20 MA kind of is respecting this trend line here. And then you have this one as well. So right in there is probably good daily chart support. If you get through that, then you've got some decent levels, the 50 MA, and of course this big trend line, which I think will get hit eventually as well. After that, I think it's probably down to 300. But again, that's a little bit getting ahead here. But either way, nice little dump there for the markets. The Q is still relatively outperforming. They were down a little bit more than the spiders today, but the chart-wise, it's holding up better here, although it did go vertical, and we've warned of that. When you have a trend for a long time and then it goes vertical, it's usually signaling that it's probably coming to an end here. But anyways, Russell 2000, we talked about that rejection off the 100 and 200 moving average. Dow losing that key area, 331.45 on the DIA. If this loses this pivot, the 200 moving average is not going to be support because we've gotten close to it so many times. We can go through it. I would look for probably 325 to 323 there on the diamond for the downside. And we have 1, 2, 3 lower highs there on the DIA as well. So just be aware of that moving forward. All right, let's get over to the semis. So interesting day for the semis. So SMH down 1.5, NVIDIA down 1.5 as well. That basically is the SMH at this point. They have earnings tomorrow. Pretty good volume there. I think they gamma squeezed a lot of shorts out, but this still has I want to say the expected move is 340 to like 275. It's a pretty wide move. It might even be wider than that. I can't remember off the top of my head, but it's pretty wide here. As far as what they're going to say, I don't know. I can never tell you what a stock is going to do in earnings, but it did come in today as well. AMD to me is a little interesting. So take a look at this 110 level. Pivot high. This is your bear flag breakdown. And then you got that kind of consolidation area, nice POC. In addition, we went right into that 50% fib. So right to that 110 area, and it pulled back pretty nicely. Speaking of levels, NVIDIA, you guys know I use the fib extension every now and then, and we do have a pretty picture-perfect move here on NVIDIA. The only wild card is earnings, obviously, but perfect 1618 there off the low. Beautiful move there, and into a lot of resistance. Again, I can't rule them out. Maybe they say AI 100 times, maybe they say it 1,000 times in the earnings call, but that's a pretty nice level there, at least at face value. Definitely used that before. Those of you guys who are taking my courses, that I've used that to call some pretty good tops here, but again, earnings is a wild card. Anyways, SMH though, still inside of this rising wedge, and it did back off. Obviously, support will be right around 125 here. If it does head down, IGV reversing as well. Pretty good, gap down actually. And then kind of stalling out right at that 310 area. There will be support around 305. and then 300 there on the downside. Dow Transports, this is interesting to me. So this continues to be weak. And if drawing this in here, I know I've been talking about the DJT going much lower if we break this trend line. And that's your head and shoulder measured move. So here's your left shoulder, your head, and then your right shoulder there. That takes you down to 11,000. And that also coincides with this big breakout area. Pre-pandemic high has never been back tested. 100-month moving average too. So if it breaks down, it's probably going to head down there. It won't go down there, all at once. But that's a level I'm watching very carefully, and that's the reason why I've been saying it's going to go a lot lower. If it breaks that area, and again, this is a divergence. It's been building for a long time. Lower highs on the transports. You guys know Dow theory, right? Higher highs in the stonk market, higher highs in the triple Qs. So we'll watch it moving forward here. Anyways, ZT here, 2-year, pretty good volume there. So maybe it got defended a little bit. Let's take a look on the weekly here. So yeah, we basically kind of tested that green bar low here, but yields, this is an issue here on the futures. Everybody's expecting rate cuts, but right now the 2-year is telling us that's not quite going to happen here. So 4.28 there on the futures. Something to watch moving forward. It's nothing yet. Again, we did back off here on the 10-year, went green to red. Look, we went into that nice reversal bar or sell-off bar. So it probably needs to consolidate. If it consolidates, this will go higher though. 30-year, same thing, right into this 4% area. So that's probably going to be resistance. But if this consolidates, you put in a higher low, it can go through that. And then you're probably up to, 42. So watch that on the TYX there. XHB, call the market police because the home builders went red here, down 1.61% on the XHB. A little bit of chart damage, taking out that pivot and getting below the 20 MA. Again, we talked about 68. That's probably where it wants to go in the meantime. If it continues to pull back, ITB, told you guys 72 coincides with the 50 moving average, maybe 71.50 on some overshoot there. I believe the weekly, there's that weekly green bar. So 71.50 right there at the weekly green bar close would be a good level there for ITB. But they did come in. By the way, Toll Brothers, I think, reports after the bell. I'm not sure if that doesn't look like it's doing a whole lot. We can take a look here. Yeah, nothing crazy here. I'm not sure if that's even out yet. It's not a fast mover anyway, but either way, we'll see if that does anything here. Anyways, VNQ, again, down 1%, bearish inside bar on the daily. I don't like this as a setting up for a move to gap fill, probably down to that 78 handle, honestly. And then after that, you lose this pivot. It's probably going to make new lows. So VNQ in weak shape here. XLF down 1.16%. The KRE was still green, though, so up 1% there on the KRE, though it did go where I said 42 would be resistance, and backed off pretty nicely here. 50 MA as well. I don't know how much higher it can really go. I mean, maybe you can get some, I don't know, maybe they get some positive news. Can't rule that out here, but it took you a month to break through there, and anybody who tried to buy that dip is underwater, so that's why you're getting sellers coming in here. I'm just not sure I love it right now. But, it had a nice pop. There's KBE as well, holding up okay. Broker dealers here backed off of, guess where? 450. So we've been talking about that level for like 3 weeks now. That's where it went, and that's where it backed off. I will say, though, if this consolidates, it could still go up. So the next level will be around 460. But if it backs off, then it's probably down to, 435 here in the near term. All right, over to crude here. That actually got a pretty good bid today. So that's shaping up a little bit better. So now you kind of have you're inside of this green bar and you're above that 20 MA. So that looks a little better. If this can shape up and firm up a little more, this can go higher. So I would say 76. Again, that's still going to be your next target. Right at this red bar high, your breakdown bar high, 100 MA. That's assuming it holds up, right? So there's no guarantee of that, but it is a little bit better. Do I love it? Not really. It just definitely looks a little bit better than it did the last couple of days, and I'm still pretty neutral on it altogether. XLE was actually green, up 1%, so that showed a little relative strength here. And then it basically closed right below that 20 moving average, and it came off the highs like the rest of the market did. Again, still not in love with the chart here. I still think they need to go into corrective mode. XOP holding up okay, though, up 0.25%. Came off the highs as well, but you're closed. You got two closes now above that 50 MA, so a little bit of sign of short-term strength here. And OIH, same thing there again. I'll give that well, the upside bias to 270 for now. Net gas continuing to back off here. Basically tested that 20 moving average. And it's trying to come off the lows here. Wouldn't make too much out of it right now. You did kind of, yeah, it basically bounced off that green bar low there. So it's hanging in there okay. This is also a 50% retrace there from the low. So that's acting as support right now. But watch that 20 moving average going, excuse me, going into tomorrow. All right. Dollar index here. This is holding up okay. So we had the big move, the breakout, and now it's trying to consolidate. So that's telling us it wants to go higher. You still have, 1, 2, 3, 4, 5, 6 candles worth of resistance there. You got 4 candles of consolidation now. So, a little bit more here. It can probably get through that. Next level will be right around 105, and then right around 106, there's your 200 MA. Kind of double top at 105, 80, 88, right? And then this level right here. So that's going to be your next big resistance if we can get through 105. So dollar index holding up okay, and that looks all right. And that's despite all the debt ceiling, drama that's going on. So, all right. Anyways, over to gold here. I think gold, I'll give that the upside bias right now. I don't love the pattern here because you're inside of this red bar, and it hasn't been exactly a great bounce here, but I'll say gold can hold up right now just because of the debt ceiling uncertainty. If that gets resolved, I think gold goes lower, but for right now, it's holding up okay. Probably still needs to go test that trend line right around 1900, but for right now, like I said, look at the weekly. It's holding trend, right? You're holding that 20 MA on the weekly, and it's telling you nothing's really terrible or nothing's really wrong as long as that is happening. Silver, on the other hand, a little bit on the weaker side, right? So down 1.16, and on the weekly, you have a slight lower low. If you close below that 20 MA, it's, probably headed down to 22. So it won't go there in one day. It won't go there overnight, but, you'll have a little bounces maybe at the 100 MA, but that's where I think it wants to go ultimately is 22 there. But, a little bit weaker than gold, obviously. Platinum also on the weaker side. This is still doing backing and filling, but I like it on the bigger time frames, as you know, and the same thing with palladium here as well. Copper on the weaker side again. I don't like 360. So even though it's the 618, you bear flagged too much over it. So if we had gone down there in a straight line, I would have been into it myself, but I don't like you bear flagged here. It doesn't mean it can't bounce at the 618. It just means the probabilities are lower, and I'm not interested in taking that trade, honestly. So I would look for more so the low 340s. You got a lot of support with that green bar, 350 to 340 there. And on the weekly, you can see that big green bar. So this is a bearish inside bar right here. I know I'm saying bar a lot, but red bar inside of that, and then it failed. So that's where the institutional money is sitting. So that's where I would look for it anyways. All right, over to Bitcoin here. Bitcoin not doing a whole lot, but it did do something. And it touched the 20 MA, and so far it rejected. It's not like anything horrible right now. It's not like it's breaking down or red, but you now have, this is daily chart bearish consolidation, and now you have a 20 MA rejection. And there's that trend line above there too. So not the strongest pattern. If you get above the 20, then it's definitely shaped up a little bit better, but not the greatest look here. And again, I think the clock's kind of ticking on this weekly pattern here. It's got to either break out or it's not gonna. So, and you're still inside of this red breakdown bar here, which is not, the worst. It's not as big as this candle. Obviously, it's not as powerful. But it's kind of like, you should be getting going right now, and it's not quite doing that yet. So definitely keep an eye on that 20 moving average. If you get above that, then you got to get above this trend line and then back above 28.5. But for right now, definitely still under a little bit of pressure there. Anyways, lastly, let's get back over to the SPY really quick. We have to have Fed minutes tomorrow. I don't know if that's going to do anything. It usually is kind of a nothing burger for the most part, but for me, bottom line takeaway today is this looks like a failed breakout. I mean, it's just this should have been coiled to surge right here. Do they need to trap bears one more time, right? I mean, didn't they do enough of that? So I don't really see it as a bear trap. I could be wrong, but I don't just see it. I just don't see it as a bear trap. Bulls had pretty much a silver platter here to take this up to 425, 430, and you didn't even get to this gap. You didn't get to the upsloping trend line without pulling back. So you lose that 20 MA. That's going to do some, probably chart damage here. in the near term. But until then, we'll be kind of neutral right now. But I still think that probabilities dictate we are headed down into June OPEX. So, anyways, guys, gonna wrap it up here. You guys take care. Thank you guys for watching. I'll talk to you guys all tomorrow.